Nirmal, hi. Thanks very much for joining in. It's been a volatile reaction and now the Nifty is lower, but it's not the Bank Nifty which is leading the markets lower. Your sense on what the markets have made of the RBI policy as well as the guidance specifically?
I think a large section of market was prepared for this. So there were quite a few indications that the policy rate might remain unchanged in December and the rate cuts will start from 2015 onward. If you read the policy statement, I think RBI is expecting November numbers which come by mid-December to be soft on inflation, but they're expecting a small bit of rebound in the month of December. And December inflation numbers will come by mid-Jan. So I think those numbers are lower, then they will feel more confident to cut the rate. So that can happen either in next policy statement, which may be in the month of Feb, or maybe earlier also, as a policy statement says that it can be out of the policy review cycle also.
Okay, Sonal, what's your sense? Are you getting an indication that, unless things change dramatically, a March rate cut is now what we should expect? Because it looks like the governor may want to act after the budget.
Yeah, that's right. So, the third Feb policy looks like it's going to be status quo. But post the budget, I think the next policy meeting will be in April. So that's the meeting where, there's a high probability of the RBI moving in terms of cutting rates. They can move inter-policy as well. I mean, that's what they have indicated. But broadly, I would say around April looks the most likely timing.
Okay, well, we have seen the bond yield soften to close to 8%, so it's possibly going to even break that level in a couple of days, if not in today's trading session. We have Lata joining in to take us through her highlights as well. Lata?
Since everybody could hear him, it does look, as Sunil says, that April is a sure shot, but could be earlier, going by the fact that he said he is not waiting for the next budget, but waiting for the quality of the current fiscal adjustment, as well as other inflation indicators. What chances would you ascribe, Sonal, to a pre-April cut?
Right, I mean, the RBI governor himself has stated that they can move intra-policy, but I think, unless things have dramatically changed, or let's say inflation expectations have, crashed from double digit to, low single digits in a matter of a month, probably at the policy meeting would be more likely than between two policies. I mean, though he's left the room open, but, at the policy would be more likely, I think.
All right. Jayesh Mehta of BOAML is also with us. Jayesh, what do you see as the trajectory of the 10-year? Is it only a matter of hours before it breaks 8%? Or will it take a long time to break 8%, sustainably? Will you wait for a couple of inflation readings?
No, I think at least the momentum till the November inflation, which is expected to be around 4.5. So there would be that momentum there. Plus, we have one auction not there in next couple of weeks. That itself, so it can break, but yes, medium term, as I said, like we are looking at 740 in next 8-9 months. It can go to 795, can go back to 805 in a trading range, but definitely moving downwards with every move and creating a new low. And we can really look forward to 7th quarter, because governor did say that, they would like to have a sustainable chance and not a flip-flop situation. So they maybe next 1 year, next 8 months, because if you really look at it, they are going to look at data, more sustainable data.
Yeah, I agree with you. Dr. Rangarajan, for a country like ours, what is a good positive real interest rate? Because at the moment, if 6 is sustainable, we are working at a 2% positive real rate. Should that be the governor's motive even as he works towards 4? Or can that be reduced? Will it depend on the economic cycle?
Well, a 2% real rate of interest is a good rate, even though theoretically one could argue that it could be even higher. But certainly a 2% real rate of interest is an appropriate level. But the point is that if the 6% is the outer limit of the range, and therefore what the Monetary Authority should be trying to do is to stay as far as possible within the range. Obviously, when you exceed the range, then very strong action is required. But even otherwise, the idea should be to stay as close as possible to the middle of the range, which is 4%. I think that is the way in which the target system will work, or will have to work.
In that case, Dr. Rangarajan, if 2% is the way in which the Reserve Bank also thinks, and if the Reserve Bank thinks that from March of 2000 or even January of 2015 to January of 2016, inflation will average around 6%, then there isn't much scope for cutting rates, isn't it? Maybe one, just to show direction, but clearly not too much, isn't it?
No, that is why I said a little earlier that the target for January 2016 should be brought down. I mean, it should be closer to 5% or even lower. And therefore, the further cuts will become possible only we transit from something like 6% at the beginning of 2015 to something like 5% in January 2016. I think it is under those circumstances, further cuts will become possible.
Okay. Fair enough, Dr. Rangarajan. Pleasure speaking with you, sir. Thank you very much for waiting along with us. Well, let me turn to the banker. Pradeep Kumar, the governor was very clear that he was not asking you all to cut rates, but he has said, I am describing a situation that despite yields falling by 60-70 basis points over the last 6-7 months, banks have lowered deposit rates, not lending rates. Are you taking a hint?
Lata, I must understand there is always a time lag for the cut in deposit rates to reflect in my cost of funding. So I have cut deposit rates. If my cost of funding comes down, I'll certainly look at revising my base rate. But I have responded to the cues in the market. When the CPI came down, I have cut my deposit rates. Both in the shorter tenor and in the longer tenor, I have reduced my deposit rates. If my cost of funding comes down because of these changes in the interest rates on these deposits, I will certainly look at. Come again? I couldn't hear you.
Well, your funding costs for a bank like SBI don't depend on CDs. Those yields have come down. Has the response to the lower deposit rate been of such a kind that you can reduce it further? Did depositors run away, or are you still seeing enough depositor interest and so you can drop them further? Should we expect from the banking system itself a cut in lending rates in a couple of months or in a month?
No, I don't think banking system will be able to cut rates in a couple of months. We'll have to wait. Some banks have already reduced deposit rates. Those banks which have reduced deposit rates maybe a month back or so may be willing to look at a rate cut maybe after a couple of months. But most of the banks in the system have not reduced deposit rates. So they may find it extremely difficult to cut lending rates.
Okay. Well, Nirmal Jain, finally to you, what have you made of what the governor said? Do you think there are enough positives in this for the stock market to chug along expecting a rate cut, or now does that become unimportant? At the moment you will be more focused only on global flows because you don't have to worry about it till February at least.
Yeah, I think that is more or less the case, and it looks like that rate cut will happen the month of February. It may not get delayed to April. And what I could read, at least in what Mr. Governor spoke and the policy statement that has come, that they want to be very sure that once they start the rate cut cycle, it shouldn't happen that in a couple of months there is again inflation moves up and they are in a bit of a difficult situation where they have to look at the rate increase or maybe take a pause. So I have a feeling that they know that inflation has come down. Crude oil is one of the biggest input for inflation in India. And commodity prices are also falling. So I think they are pretty comfortable with that. But maybe give a couple of months more so that you are doubly sure. And once you change the policy stance, then it's consistent and you follow the stance for a longer time period rather than pausing it again or reversing it, which should not be the case. So I think he's waiting for a couple of months more, but more or less writing on the wall is clear. As you see, the long-term bond yield is falling, the short-term interest rates are falling, so there's no way that rate cut won't happen. But whether it happens now or a few months later, so I think it's a couple of months delayed. Market might, very large section of market was expecting this. Maybe a small section was disappointed, but I don't think it's a major event for the market at this point in time.
Fair point. Thank you very much, Nirmal Jain, for joining us.
Thank you, sir.
I have just a couple of questions more for the banker, the bond dealer, and the economist. Just a monosyllabic answer, actually. Sonal, at this juncture, how many rate cuts would you expect from the Reserve Bank all of calendar 2015?
Actually, quite comfortable sticking to our view that 50 basis point, so 7.5. I think the fact that he reiterated that government has more or less accepted the 4 ± 2% target is important in terms of anchoring, the space that will be available for rate cuts. So 50 basis point is quite reasonable in this inflation targeting framework.
Jayesh?
I think our forecast is roughly around 100, 75 to 100, but more towards 100. And I think, when we started the venture, Jan 2016, a lot of positives were not really there. They didn't exist in the world, right? So even if your oil prices shoots back a little bit more up, it's still definitely much lower than where we started predicting 6% inflation target. So from that perspective, that is quite achievable. I think the only delay which we are seeing is because of base effect, your inflation is going to go up to 6.25 by March, and you cut the rate now, maybe wait for that number to pass through, and then we will have a series of cuts. So maybe at least 75, maybe 100.
Okay. All right. Finally, Pradeep Kumar.
I'll tend to agree with Sonal. I think it's be more of 50 because the impact of this sustaining this inflation below 6%, we'll have to wait and see. If we are able to sustain it below 6% consistently, maybe a 75 basis point.
All right. Thank you very much. That's it from the Reserve Bank as far as the credit policy is concerned. But clearly there is a lot of parsing and analysis that the markets will have to do, not just of the policy but also of global cues. Incidentally, the Reserve Bank governor and the deputy governor in particular was extremely skeptical of the fall in crude prices. Didn't seem to be willing to bet that that would be the trend for all of 2015. On that note, Ekta, what are the markets saying?
Well, Lata, the markets are absolutely static. Not much of a reaction that you'd have to say. It was down 0.3% pre-policy. It's recovered to that level of a cut of around 0.4%. You'd have to say that it was quite choppy post-policy, trying to make up its mind in terms of the guidance that came out. And the Bank Nifty intraday chart will be more telling in terms of what took place and the volatility that took place in terms of the Bank Nifty. It had recovered to a gain of around 0.15, 0.2%, and now it's back down to a cut of around 0.34%. The 10-year, however, has softened quite considerably. It's just about at that cusp of around 8% at this point in time. Anuj?
Indeed. So, just one more point that we need to make is that in between all of this, the mid-cap space is outperforming. The breadth is negative, but the mid-cap index is actually up about 0.14%. And essentially today it's about profit booking in general, because even if you take a look at the Nifty, the top loser today is Asian Paints. That's down about 3%. BPCL is down about 3%. And then, of course, there are news-driven stocks like Mahindra and Mahindra. That's still down about 3% or so. So that's the final word on the market. As we expected, Ekta, it's 1 hour impact of the policy, and now the market is back to tracking other cues.
Yes, something that you had pointed out pre-policy, but I think we can just get in one more question with Mr. Pradeep Kumar. Mr. Kumar, one of the things that the RBI governor did announce, which was during the press conference, is that they will look to possibly, ease the 525 scheme, restructuring scheme, extended to existing projects, 1, and 2, possibly allow more equity participation by banks in restructured projects. It currently stands at 10%. They would look to possibly hike it up. Your thoughts on both of these?
See, we have been requesting the governor to the Reserve Bank to look at this 5/25 for existing projects, because the current guidelines permit us to do it for new projects as well as for projects which are completed. But there is some stress even in the existing projects, and we have been requesting the Reserve Bank of India to extend the scheme for the existing projects which are under construction. So this will benefit projects under construction. We have also made a request that this 25% of a new banker in terms for refinancing is also very difficult, because in large projects all the major banks are involved. Getting a new banker is very difficult. So we have made these two requests to Reserve Bank of India. Hopefully they will consider both of these. Yes, equity in restructuring has been capped earlier at 10%. Of the Banking Regulation Act, we can go up to 30%. So we have been requesting the Reserve Bank to give us more flexibility. It's not that in every project we are going to take 30% or whatever the guidelines permit, but at least it gives us more flexibility.
All right, let's get a corporate opinion now. Then V.S. Parthasarathy, CFO of Mahindra & Mahindra, joins in right here in our studios. Mr. Parthasarathy, good afternoon. Your first comments on the RBI policy. Looks like it could be March when we have the first rate cut.
Yeah, it looks, at least that's what they said, that it will be early part of next year, and it could be earlier in the next year. This is the two statement I had from the RBI governor. So I hope it's sooner than later, because Make in India certainly requires a makeover for the interest rate as well. The sooner it comes, the sooner it will be better for the India Inc. We need a momentum going forward.
Okay. Mr. Mukherjee, Mr. Parthasarathy, I'm sorry, wanted to get a sense in terms of what the cost of funds is looking like right now for you at this point in time, and overall what is demand looking like, and what do you expect it to possibly be in 2015?
Yeah, the first of all, foremost is your point is about interest. I think for blue chips, the interest rates have come off a little bit. You can say about 20-25 basis points has come off from the highs, let's say 4-5 months back. So actually the interest rate regime is a little lower for blue chips, and even I think for the government bonds now it's a little lower. So the issue is not the interest rates, and also in terms of overall, we've seen a reasonable Q2 in GDP, lower than Q1 but still reasonable. But the key interest is that momentum going forward. The industrial production has been very low, okay? And while HSBC PMI index is positive, it's one of the factors. And at a ground level, I'm not seeing that kind of a demand pull which is coming through. This is pointed out even in the RBI report, which says that rural demand is very muted. And we are seeing that evidence at the ground level as well. And whatever interaction I'm getting both from the various industries as well as the financial institution, it's a very dovish kind of environment. And a rate increase, not for blue chips, but for the entire populace, including the retail credit, would have done a lot to push up the interest.
Indeed, and that's reflected in your monthly sales numbers as well, Mr. Parthasarathy. There's quite a bit of disappointment in the sales data that the market had from Mahindra & Mahindra this time around.
Yeah, like I said, there is sluggishness of demand at the market end. But that apart, month apart, we are talking here about policy rates. What I'm saying is that the momentum, for example, we talk about this, that a 100 basis point cut in the RBI rates could have an uptick on the GDP by about 25 to 35 basis points. Yeah. So this is clearly one thing that, which could have done. And the key thing is that the sooner this rate cut comes, the better it is for the industry. So I hope, as they say, achhe din aane wale hain, so maybe next year the Make in India will get a makeover in terms of interest rates beginning to stand.
Okay. One of the things that I wanted to ask you about, sir, is the fact that there was that 4% plus and minus 2% that the RBI governor did speak about, that maybe that is something that the government has accepted as an inflation target eventually beyond Jan 2016. In your sense, then, do you think that there's a huge room for the RBI to possibly cut rates in 2015 as aggressively as the 75 to 100 basis points that has been spoken about, simply because of keeping in mind that 4% target?
So first and foremost is I think inflation has got two dimensions which I kind of want to think about. One is the core inflation and the second is overall inflationary pressure, mainly because of the macro things like the oil prices being what it is today. I think by and large these two factors have got tailwind behind it. So there is a huge amount of upside which is available for us to look at some bit of cut. Now RBI governor has rightly pointed out that he wants to do it in a phase that there is no knee-jerk reaction and no ups and downs. So when he wants to look at this, he wants to be able to continue not only in terms of rate but also the ancillary environment, and I think it's a very welcome step.
Okay.
However, the sooner the better.
Mr. Parasati, I know we've called you for reaction on the policy, but just a word on the overall sales environment, especially for tractor sales at M&M. There was quite a bit of disappointment this month. What do you think went wrong, and what's the way forward?
Yeah. So the basic thing is that I think at the ground level, which is what I talked about, the demand is sluggish. Yeah. And there are many factors, many people say, and which is what I started by saying. I've talked to various industry, not just tractor, at the rural level, and I've also talked to various financing groups. The basic factors coming, some of them may be the impact of Narega, some may be the impact on account of dovish MSPs which are prevailing there. But a combination, the rural income for households seems to have gone down, and that seems to be temporarily on a pause mode. And that is where my thought process was that at this point of time, for the manufacturing industry, a little bit of push would have been very beneficial.
Yeah. Okay. From a CFO perspective, sir, can you give us a sense in terms of this new 10% restructuring that the RBI is possibly contemplating in terms of bankers allowing them to participate in CDR projects, the hike beyond 10% and maybe even 30% that bankers are looking for? How does that work from a company perspective if in case the company is under CDR?
I probably am not the right person to answer because I don't have too many of CDRs that I do at this point in time. But I heard that they were thinking about making it from 10 to 30, and I think it overall should be beneficial. But I don't have a direct sense because I'm not big into CDRs. Yeah.
Okay. Sajid, we do understand that you're in a hurry. I'm sure you have to get back to writing your report. So quickly, your last word in terms of the RBI policy totally, and also the fact that that 4% target was reiterated by Governor Rajan this time round, and also indicating that the government has accepted it. Does that change your stand anyhow?
We had expected that. I think, Ekta, the point to note is we can pass through the language of every policy and come to conclusions. But there's been remarkable consistency in the RBI over the last 6 months. And that consistency is they will be data dependent. That the goalpost of 6% by the end of the year will not change. And therefore, the data is really going to drive policy. I think it's important to remember that even in the first quarter, if inflation pans out the way they expect, that may open up a little space. But it is contingent on that inflation print, on fiscal dynamics, on global commodity prices. So I think the data dependence, I just want to underscore that. The second point you said is very important. That once you get to 6%, you're basically at the very upper band of the 4 plus or minus 2 that the committee had suggested. So I think we need to accept that the room for very large cuts in 2015 will be constrained by that. No one is saying that down the line monetary policy could be eased substantially. What you have to happen in the interim period is all these supply side movements. That if the food disinflation is truly structural, that's 50% of the basket, and you truly get some supply side measures and infrastructure, then of course you can get to 4% inflation, 5% inflation, and still have growth at 6%. I think markets need to be patient. We've come a very long way in the macroeconomic adjustment. Foreign investors are very positive about India. Now let's not act prematurely. Let's take this to its logical conclusion.